What's up folks, welcome back to another video. In today's video, we're going to talk about ICT PD array. You probably heard about ICT PD array before, but you don't know what it is and how many PD array are there. This video is for you. So let's get started. So we have two types of PD array. We have premium PD array and discount PD array. Premium PD array is simply price is too high and is ideal for short. And discount is price too low and it's ideal for long. So now let's take a look what are the premium PD array and discount PD array. So first off, we have all high. So an all high is the previous highest high, and that is the closest to current price, and it's normally a wick. The reason why it has to be close to the current price is that because let's say this chart right here is a 15-minute time frame. It is the highest point of the 15-minute time frame, because if you go for 4-hour or a daily time frame, this is probably not the highest point, because of course there's going to be a higher time frame highest point, which is not this one, right? So if you trade from a 15-minute time frame, it has to be that the highest of that 15-minute time frame, okay? And it close to current price. There's maybe another high that way far away, okay? So we're talking the highest point that closer to current price, and it normally a wick. So the wick is what we're looking for, okay? So how we use this? Well, we can use it as a reversal or a target, right? So let's say price coming right here, take out this high, and it continue to the upside, and you know where your target is. This high right here is your target. And when price finally reaching that high and take out buy side liquidity, remember, above this, there is buy side liquidity. So after you take out that buy side liquidity, you're probably going to the smaller time frame and looking for that short to the downside. So that's how you use a no high. There's another PD array, which is a bearish rejection block. Okay, so a rejection block is similar to a all high, but we look at the body of it. Okay, so price may go to the upside, but it cannot reach for the all high, so it take out buy side liquidity above this close bullish candle right here, which is a rejection block, and it works the same thing. It's it has buy side liquidity, and you can use it as a target, or you can use it as a reversal. Okay, so the bearish rejection block is the highest close candle, which is different from all high. It's candles and not the wick. Okay, two completely different things. A high, all high is the wick, and rejection block is the body. Okay, another PD array, which is a bearish order block. I think you heard this one a lot. It's really simple, right? Bearish order block is the last candle or series of last candle. There could be 2 or 3 last candle before that move to the downside, which also a bearish order block. Okay, you can count 3 candle that the same color as one bearish order block as well, but in this case it's just one bullish candle right before the displacement to the downside created a new low. Okay, so that is a bearish order block. And how do we use it? We use it for price to coming back to it and continue to the downside. Another PD array is a fair value gaps. So fair value gap is simply created by 3 candle. We have the second candle here has no wick or candle overlap, which create the fair value gaps. You see the first candle here, second candle, and the third candle here. The low of this and the high of this, is not overlap. It has no wick coming down and meet, which create these gaps right here. Okay, so if price going back to it, and we expect price to reverse from that fair value gaps. Okay, another one, we have bearish breaker. So bearish breaker is the last bearish candle before price breaks structure to the downside. You can see here the last bearish candle, right, before price coming to the downside and break that low, that structure. But price need to take out previous high first before coming to the downside. This move to the upside right here, it has to take out previous high. Otherwise, that bearish breaker is not valid. Okay, you want to see price go to the upside and take out this buy side liquidity right here. And when it come back down and price coming back to it, that is a bearish breaker. Okay, you can looking for short entry to the downside. So that is a bearish breaker. Another one, we have a bearish mitigation block. So a bearish mitigation block is similar to breaker, but second high doesn't need to take out previous high. You see there's a high, the first high, the second one. You see that this one is lower than this one. It doesn't take this one out, right? So that is a mitigation block. So what is the difference then? If it's similar, but the difference is just this second is not needed to take out this one. What is different? Well, mitigation block is preferably used for continuation. A breaker is more of a reversal, right? So if price going to the upside and take out this, and it coming back to the downside and take out the low, it becoming a reversal. But this one, you most likely find it when price continue to the downside, because the market already shifting bearish. It doesn't need to go out and take out this high anymore. It just keep going to the downside. All you have to do is wait for price to coming back to that last bearish candle, and you can look for that short to the downside, so which is a bearish mitigation block. So now we have come to discount PD array. Okay, so it's similar but the opposite way. So first we have an OLO, right? So OLO is the previous lowest low, and that is the closer to the current price, and normally a wick. Okay, so similar to all high, just the opposite. Okay, I think you already understand it, so just keep moving. Bullish rejection block. So the same thing, which is the body, not the wick. The wick is an OLO. The body, that close, is a bullish rejection block. Okay, so bullish rejection block is the lowest closed candle, which is different from OLO. It's the candles and not the wick. Okay, the closed candle, not the wick. Bullish order block, same thing. Bullish order block is the last candle or series of last candle before price go to the upside or displacement to the upside and created a new high. So waiting for price to coming back to it and looking for that long entry to the upside. So now we have fair value gaps. Okay, similar to premium PD array, discount PD array also have fair value gaps, right? We have a high right here, we have a low right here, and we have this candle that go through, and then this two does not meet. Okay, if the wick coming back to this one right here, let's say go to the middle, and this wick come down to the middle as well as meet, so there's no fair value gap. Okay, but because the wick is here, the last low is here, and has nothing overlapped, we have created a fair value gap, and we expect price to come back to it and continue to the upside. Next one, we have the bullish breaker, right? So similar to a bearish breaker, we want to see this low that coming down, take out the low first before continue to the upside and break the structure. Okay, coming back to it and looking for that long entry. It has to take out previous low first. Okay, so that is a bullish breaker. For a bullish mitigation block, it's similar, but the second low right here, it doesn't need to take out the first low, right? It could be higher because this is a mitigation block. The same thing, we wait for price go to the upside, take out this high, coming back to it, and when it come back to that bullish mitigation block, you can look for that long entry to the upside. Okay, this low doesn't need to take out it. Again, mitigation block is normally used for continuation, while breaker is used for reversal. Okay, so now we are in the chart looking for an entry using PD array, right, as our guide. So we have a little note here that help us. We have first, right, identify liquidity or your target. So the right away we can see that we have a buy side liquidity right here. Let me make it a little bigger so you can see. Okay, we have our buy side liquidity. So right after we identify the buy side liquidity, we have to look for PD array. What is the PD array that possibly that you can use in this scenario? So if you look to the downside, we have first of all a bullish order block right here, right? The last down candle, you can use both of it, right? You can use both of it, but if you want to be more refined, you can use the last one as a bullish order block. And immediately you also see that we have a fair value gap as well. So that is the two, that just jump out at you in this particular example that you can use, right? So after that, we have to note the PD array. So you have to note it out so you can easily, see it when you look at the chart, okay? So after you noted it, wait for price to sweep liquidity. Identify a liquidity, right? So you have a low here, you have a low here. If you want to, you can draw, price like this. Sorry, there we go. So we have a low here, we have a low here, and you want to wait for price to sweep out liquidity, because you have to wait for price to sweep out liquidity first before you enter the market. This is something that a lot of people don't think that it's important, but it really is important, okay? Because let's say you don't wait for price to sweep liquidity, you immediately see this as a bullish order block, right? You're trying to buy from this, you already got taken out right away because it still need liquidity for price to push higher. So you have to wait for a liquidity sweep first, okay? And in this case, we have this equal low as our sell side liquidity, right? Price immediately goes below it, take out all of this sell side liquidity. So after that, you can see that price goes right into our fair value gaps, also into our bullish order block, right? So right here, how do you get in? After we know that, okay, price coming to it, we have a reversal to the upside after price coming into our discount PD array. Also, if you look at it from a premium and discount perspective, you can use this Gantt bar, right? You can put from the low, you go to the top. Sorry, you're gonna flip it, right? We want to color to match, so we use this like that. So we have a premium array above, we have a discount array, below. So if you look closely, when price take out this sell side liquidity, where is price at? Price is at the discount level, right? Let's say you don't know the PD array, you're looking for buying opportunity up here. You are still in premium, which is really dangerous because price still, come to the downside. We want to buy at the discount price. We do not want to buy in a premium price, okay? So knowing premium and discount, you want to look for price in the discount if you want to go long. And in this case, you can see that we have a discount PD array down here and also price coming into it. So we know that we are at a good place to looking for long entry, okay? So to get in, you can go to a smaller time frame and looking for your entry, okay? So in this case, you see that when price come to the downside, we have a market structure shift to the upside right here, right? So you can draw it out like this. We have a market structure shift, okay? And we have a small fair value gaps in here. That's where you can get in, okay? Your stop, you could use stop here, and your target the buy side liquidity, you see? So that is how you use a PD array as, an entry. And that's it for today's video, and I will see you guys in the next video. Take care.